it's a slower time, but it will get traction. We will see a lot of volumes. Now, the other thing is a lot of you see volumes in the ETFs. Like, oh my God, they've done $18 gazillion of volume. This is the biggest thing ever. It's because they're being arbitraged. Well, that being used as the anchor for the arbitrage. So people are arbitraging the futures contract, which is why when you look at the holders of these ETFs, the biggest ones are like Millennium and all the hedge funds. Everyone's like, look, it's amazing. They're speculating in crypto. No, they're not.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. The potential collapse of the global financial system and economy is a pressing concern. A popular topic among financial analysts and commentators, particularly those in the alternative assets space, is the concept of sound money. Many proponents of both gold and cryptocurrencies have long discussed the inevitable downfall of the fiat money system. They argue that there is a singular solution to escape the burden of overwhelming debts. With reckless government spending and dwindling tax revenues, many are concerned about the potential for a complete collapse. Imagine a scenario where trillions of dollars vanish, leaving millions of people around the world in poverty. Real Vision's CEO, Raoul Pal, offers a unique perspective on this issue. He argues that the anticipated collapse that we fear has already occurred in 2008. What we currently have is a financial system that quietly continues to wreak havoc on everyone. According to Pal, the global economy came to a standstill in 2008 when the banking and real estate industries crumbled under the weight of excessive leverage. The near-total collapse of the global financial system threatened the very existence of our monetary system. However, central banks stepped in to save the day by implementing multiple rounds of quantitative easing, preventing a complete wipeout. Governments worldwide have made a deliberate decision to print money in order to address their massive debt expenses. They are attempting to create the illusion of stability and pretend that everything is fine. However, this comes at a great cost to the general population. The government is positioning itself as the hero, saving the world from the financial crisis, without considering the consequences of their spending spree. Unfortunately, the burden of maintaining this facade of stability falls on everyone, as they are subjected to an annual inflation tax of 15%. This tax is silently eroding people's wealth and further impoverishing the average person. In a recent interview with Raoul Pal on The Journey, he argues that the world has already experienced the consequences of this charade about 16 years ago. Raoul discusses the current state of the global economy, highlighting the profound impact of the 2008 crisis and the urgent need for a solution to the ongoing challenges. The well-known macro analyst and former Goldman Sachs executive provides a vivid description of the entire problem, explaining how we have all become debt slaves and presenting the only solution to this issue. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
So the boring zone finishes at some point, and then we transition to the banana zone, which is the full crypto summer and crypto fall. Now, those of you who get confused because you don't follow along properly and don't listen, these are not the actual seasons. These are the crypto seasons. So each year is a different season. It's not, oh, it's transitioning to fall because it's September or October. No, you're not listening. Fall is 2025 at some point. And I'll come in to show you how we actually calculate this stuff in a bit, because I think that's an important thing for you. ETF. So ETH comes out, gets fucking slotted immediately. It was so obvious this was going to happen. And that's the grayscale selling. So there's all of these people have been locked into this damn thing forever. Now have to sell. They want to get out of the trade. They've closed the gap. There's a bunch of arbitrageurs. So this whole thing needs to mess around for a week or two as we puke out a lot of the people from this, people reposition into the other ETFs, and the sales machines of BlackRock and Fidelity and all of these guys go out and start getting the ETH narrative out there. Now, don't forget, it's summer. So they're kind of knocking on the door of their favorite RIA, and they're all in the Hamptons or wherever they go. So it's a slower time, but it will get traction. We will see a lot of volumes. Now, the other thing is a lot of you see volumes in the ETFs like, oh my God, they've done $18 gazillion of volume. This is the biggest thing ever. It's because they're being arbitraged. Well, that being used as the anchor for the arbitrage. So people are arbitraging the futures contract, which is why when you look at the holders of these ETFs, the biggest ones are like Millennium and all the hedge funds. Everyone's like, look, it's amazing. They're speculating in crypto. No, they're not. What they're actually doing is arbitraging the futures contract with the ETF, which acts like spot, because they can't hold spot. There's other people, and these guys don't trade the perps markets. There's other guys arbitraging the perps against the futures, perps against the spot. So there's a lot of these players who are keeping prices together. Arbitrage play a really important role. That is most of the volume. That was most of the volume in all the grayscale trusts as well. They were arbitragers. So a lot of stuff has to get unwind. So it gets messy and noisy. One of the typical examples. Hello, Nala. How are you? This is Nala, my fur daughter. She's there's no snacks for you, not yet. This is what happens a lot, even like index inclusions. When a stock comes into the S&P 500, you get a lot of these shenanigans. A lot of hedge funds pre-position for it. There's a lot of arbitrage things as the index arbitragers figure out where it changes fair value. All of that. Anyway, the main point is the point I always keep making: it's all fucking noise. It just literally doesn't matter. Is tomorrow more digital than today? Yes. Is liquidity coming?
Donald Trump, the former United States president and current Republican Party candidate, made a public declaration of his intention to, if he wins, he aims to position the United States as the global hub for cryptocurrencies. In November's presidential election, Trump took the stage an hour late and addressed the crowd at the Bitcoin 2024 conference in Nashville. Tennessee Trump expressed his deep admiration for the Bitcoin community, comparing it to the early days of the steel industry. He confidently predicted that Bitcoin would surpass gold in value, emphasizing that it is not only a technological marvel, but also a testament to human cooperation and achievement. In a swift move, Trump wasted no time in directing his criticism towards his political rival. He made it clear that he was not referring to his opponent's intelligence, but rather to his opponent herself. This seemed to be a clear reference to Kamala Harris, the presumptive Democratic Party nominee for vice president. As the former president, he shifted his focus to the discourse surrounding the energy consumption of Bitcoin in the field of artificial intelligence. He made a bold promise to generate an abundance of electricity using fossil fuels to the extent that people would be compelled to say, "Please, Mr. President, we have an excess of electricity." Also, restated intentions to reverse federal incentives are available for manufacturers of electric vehicles and charging stations. In his speech, Trump expressed confidence in his potential as a candidate for the cryptocurrency and Bitcoin communities. He assured the crowd that if elected, he would deliver impressive results that would please them. He also urged the audience to show appreciation for the work he planned to undertake. Trump emphasized the importance of America being at the forefront of crypto's future, stating that if Bitcoin is going to the moon, he wants it to be America that sends it there. On the contrary, Edward Snowden stood out as one of the most anticipated speakers at the previous day's events on July 26th. His message was distinct from the usual lineup of politicians and aspiring congressional candidates present at the event. Instead of advocating for Bitcoin as a political instrument, Snowden advised individuals to exercise their right to vote, while cautioning against becoming involved in a cult. The main point of his speech was to caution against politicians who only support Bitcoin and cryptocurrency as a means to gain popularity among voters, rather than genuinely understanding and advocating for these technologies. Speaking softly throughout his talk, he emphasized the importance of the cryptocurrency community remaining cautious. Strategically obtain what you require from others without compromising your own interests, even if it means supporting them. Let's back to the Raoul Pal interview.
Are we seeing liquidity happening? Yes, and I'll come on to the liquidity in a sec. Those of you who are also invested in technology, tech's having a correction. finally, I mean, the markets have not had a 2% fall. I've been super long tech. My liquidity analysis from Global Macro Investor and Real Vision Pro Macro got me into tech at the absolute low, which was amazing. That back in 2022, and I've been long ever since. Excuse me. I've got to keep eating as well, right? And I've been long ever since. I actually took profits in the semis at the height of the day. That doesn't normally happen. I'm not a guru. I don't play one on the internet. Managed to fucking nail that. Took profits. I'll probably get back in at some point because obviously that whole thesis is going to continue to play out. The whole AI thesis, everything else keeps working until the business cycle and liquidity go. So right now we got a few wobbles. Dollar yen blowing up. Dollar yen is a carry trade for hedge funds, so that unwinds other things, and so we've had a bit of that. It's noise. It's all noise, and so you're going to get opportunities to put some trades on that you might have missed. Tesla will be one. Maybe you get a chance at Nvidia. I think it probably corrects a bit further, takes a bit longer. But these kind of things, these are the opportunities. If you've got a longer term time horizon, you go, oh, thank you. I get a chance to put on a trade I couldn't put on, or I get a chance to add with a low risk adding opportunity. It's really good. It's got that salty sea freshness of it. It's really, really lovely. It's light, low alcohol. I like lower alcohol wines. They're more elegant and structured on the palate. Just lovely. So yes, tech I think is going to give us a huge opportunity. I'm still remain super bullish. Can I have another leg lower? What again? I say these things. I don't care. I mean, I bought these things so much lower down. You know, most of the stuff's up 100% plus. But even if not, for you guys, yes, you can find those opportunities. So I do think there's good opportunities there. I'm still probably, if I held one stock for the next 18 months, it's probably Tesla. And I've talked about this in the past. Tesla's driven by two dynamics. One is car sales. Car sales are driven by the economy, and I'll come on and show you some of this stuff in a sec. But they're also driven by technology, the Optimus robots, the robo-taxis, self-driving, all of this. But this acts as the weighted anchor. And when the business cycle picks up, it pushes this one higher. And before you know it, this is why Tesla has these consolidation, sideways, messy down markets, and then hyper accelerates to the upside.
An analyst specializing in Bitcoin believes that the introduction of Ethereum exchange traded funds, ETFs, may have been premature and could have been better timed. Pose a potential risk to the value of Bitcoin. No new capital enters the market. It would have been more prudent to only have the BTCF in 2024. Charles Edwards, the founder of Cole Investments, believes that the introduction of a new Ethereum ETF will only serve as a distraction for investors who are already invested in Bitcoin. Current BTCF holders, especially at the institutional level, may feel the need to diversify their portfolios and purchase the Ethereum ETF. However, without new flows in the overall market, this creates selling pressure on Bitcoin. According to Edwards, there has been a significant flow of approximately $1.53 billion into 11 products since the launch of the Spot Bitcoin ETF on January 11th. Since the launch of the Ethereum ETF on July 23rd, the dominance of Bitcoin has remained relatively stable, increasing by 0.07% over the past 24 hours based on TradingView data. On the debut trading day of the Spot Ethereum ETF, there were net outflows of $78 million. However, the following 2 days saw inflows of $44.5 million and $31.1 million respectively. According to Edwards, the launch of an Ethereum ETF in a market that is not particularly strong suggests uncertainty regarding capital allocation. He does not foresee any significant catalyst in the near term that would lead to a substantial increase in price. As of the time of publication, Ethereum's price has dropped by 99.2% since the Spot Ethereum ETF was launched on July 23rd, trading at $3,178 according to CoinMarketCap data. Ethereum's value has also declined slightly more against Bitcoin, dipping by 10.4% since July 18th. Other crypto analysts share the belief that the situation could change in a few weeks. Regarding Bitcoin, the start of trading of the spot Ethereum ETF appears to have triggered a sell-off, according to Julia Marino, the head of research at CryptoPoint. Similarly, analysts attribute the price decline to the grayscale Ethereum trust. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.